Global stocks plunged this past week after the number of virus cases outside China surged, particularly in Italy, South Korea, and Iran. However, Warren Buffett told investors not to buy or sell stocks, which he referred to as businesses, based on the day's headlines. To Buffett, the real question is, has the 10-year or 20-year outlook for American businesses changed in the last 24 or 48 hours? According to Buffett, many of the businesses that Berkshire owns, like American Express and Coca-Cola, you don't buy or sell based on today's headlines. He said that if it gives you a chance to buy something you like and you can buy it even cheaper, then it's your good luck. Well, I have a message for Warren Buffett. I'm back. And I'm sure he didn't hold his breath waiting for that message. So, let's take a look. With the recent volatility in the stock market, it could be a smart idea to keep your cash close. Or find a place to put your money that is recession resistant and might do well if the market continues to fall. In a nutshell, that's what I did with a chunk of my cash. I bought Berkshire B shares once again. Berkshire Hathaway might not seem like a great buy. Berkshire significantly underperformed the S&P 500 in 2019. Berkshire gained 11% while the S&P 500 gained 31.5%. Moreover, for a company whose business model consists of reinvesting cash generated by its operating businesses, the lack of recent investment activity while sitting on over $100 billion is a concern. But I'm not too worried that Berkshire underperformed in 2019. Berkshire often underperforms when the stock market has a great year. Buffett has even cautioned investors to expect this. It's when the turbulent times arrive that Berkshire's businesses do well. The core of Berkshire is the insurance business. This is about as recession resistant as a business can get. Other Berkshire businesses have similar dynamics. Since 1965, the first full year Warren Buffett was in charge at Berkshire, the S&P 500 produced negative returns in 12 separate years. Berkshire Hathaway outperformed the market in 10 of those. Overall, Berkshire has outperformed the S&P 500 67% of the time. While the cash hoard has been frustrating, it could end up being Berkshire's biggest asset if the stock market continues to fall. Buffett has the unique ability for finding excellent long-term opportunities when the market is down. Berkshire's available cash is one of the main reasons I decided to buy back in. Another consideration is that Berkshire spent more money on stock buybacks during the fourth quarter than it has in any other quarter in its history. During November and December alone, Berkshire spent nearly $1.7 billion on buybacks at an average price of $219.52 per Class B share. So, if Buffett and Munger believed they were getting a discount on Berkshire shares at $219.52 per share, I'm back in. So, let's take a look at our charts. So we're looking at a 20-year monthly chart on Berkshire Hathaway Inc. This is the B shares once again, and depending upon your platform, the symbol could be BRK/B, BRK.B, or BRK-B. You just have to check with your provider. The close on Friday was 206.34. Now, I was in early on Friday morning, so I got a little bit better price than the close. Now, the thing that's important here, first of all, obviously, is the bottom there in 2009 and then the upward arc since then. But more recently, say within the last year, year and a half or so, we have this channel. And the channel has been moving up like that, with that at the bottom of the channel and this at the top of the channel there, more or less. You get the idea. So we've got this upward moving channel. Now go down here to the MAC. We have that upward moving channel in the price chart, but at the same time, we have a downward moving MAC. So that is an interesting divergence to me because I think we started bottoming, and actually we had bottom until the coronavirus information came out. And then the fast line, which was above the slow line, got reflected back down. I think it's just going to reset here soon enough. And we're elevated above that zero line. We're at a 7.82, and I think it's going to bottom once again and head on up. So I got a second chance. Moving down here into the histogram, you can see that it did bottom and it was heading on up. And then all of a sudden the news, and we get that move down here. I think it's going to be back on its way up here soon enough. Don't know how long it's going to take, but I'm not too worried. Price rate of change, somewhat the similar pattern. Bottom here, heading on up. Now, we had that move down there, and we're just revisiting down here. I think, again, it may go a little bit lower, but I think it's going to be on its way soon enough, and it's near that zero or midline. Same thing here in the RSI, a moderate 46.32. Nice bottom. We're within striking distance of that midline or 50. I think we're going to be on our way. Into the stochastics, much the same. Can't say anything about volume. And then the Williams. Williams has gone down here. It might even continue into that oversold territory. But again, with Warren Buffett at the helm of Berkshire, I'm not too concerned. Moving back on up here, one last look at the chart. So this upward moving channel, while at the same time the MAC is heading on down and ready to reset, that is very interesting to me. I like that divergence. I hope it works out for me. Who can say? Only time will tell. But I'm willing to hang in there. And for today, that's ChewDog Charts. Thank you.